Hey, everybody, and welcome back to Christopher Garza Real Estate News, where you're going to get nothing but great news as far as real estate goes, and that is if you're in a certain area. So, there's going to be no market crash. Sorry for all those doom gloomers. No market crash. It's all ridiculous. And as far as the people that are saying that it's going to happen or have said that's going to happen, they were mistaken. Sorry about it. A little bit of an article here to kind of show you as far as delinquencies and what everybody thought was going to happen after COVID and all these homes were being bought up for high prices at a low interest rate, mind you. Uh, so, three new data reports have concluded that more people are taking out mortgage and willing to pay more for properties, while fewer who already own homes are having problems paying off those home loans. So, not a lot of delinquencies out there, and the real estate market is super strong. So, even though they are down 41%, which says on the bottom here, down 41% from the previous year, it is up 23% from the previous quarter, which is not a huge surprise, seeing as the first quarter is typically a super slow quarter in the real estate market, and the second quarter is already supposed to be above that anyway. A lot more people go out and buy homes when it's nice and bright and beautiful, and they don't have the cold weather and presents that they have to put on their credit cards and pay off over time. That's just how the real estate market has been historically. So I don't see a huge surprise in that uptick of 23%. But as far as delinquencies and all this stuff, it's just not happening. So if you wouldn't mind, smash that subscribe button and like, share, and subscribe. It would really help the algorithm and get this out to people that you like, neighbors, friends, and even people you don't like. You can get them to move out. Send them this video if they live in the area. And as far as the areas that I'm talking about, we have South Seattle, West Seattle, Tukwila, Burien, Des Moines, that kind of area, the SeaTac area. So these are going to be areas, and condominiums are not going to be included in these areas when I'm listing statistics. So just residential. Sorry, condominiums. No boathouses either. Those are not going to be included in this. Now, as far as the 7-day running numbers, which is this last 7 days of statistics that we're getting pending, on market, got off market, decided to cancel, these are the numbers that we're getting from the multiple listing service, the Northwest Multiple Listing Service. And for new listings, we have 55, and listings pending, we have 74. Now, that's a little under 1.25 that are coming off market for every one that's going on market. What's really interesting to see here is that for the solds, they're almost at par with the pending, which we haven't seen the last 3 weeks. And we'll go over that later on. You'll see one of the statistics on that. But it's really interesting to see that people are going through, financing is going through, and homes are selling again. I say again. It's not really like they weren't selling. It's just certain things were happening and they didn't sell at the time. So mortgage rates here, as far as last week, definitely down. This shows up 0.01. That's just from the last time that Mortgage News Daily had basically restored the information. So they do it every other day, weekly, half weekly, depending on when the rates are available and they can grab them. So today's mortgage rates remain at levels that are much higher than most of the past. Tongue twister there. Remain at levels that are much higher than most of the past few decades, but refreshingly lower than the past 3 weeks. So like I was showing you, they're slowly going down the past 3 weeks, this time even going down a little bit further to 7.08. Fed stimulus and fiscal issues are not root causes, but ultimately measurable increases in inflation and the measurable resilience in the economy is keeping rates high. And what that basically means as far as real estate is, real estate market is super strong. The feds printed off a whole bunch of money when the economy had to shut down. Nothing was being produced, and the value of the American dollar went down. So we have to bring that dollar back up. And one way to do that is interest rates. And since the real estate market is so resilient and strong right now, interest rates are most likely going to have to raise back up again, seeing as it is such a strong market at the moment. There's such pent up buyer demand that they're even willing to, buyers are willing to purchase well priced homes on the market right now with these higher interest rates. So one of the statistics that's interesting that you see here is pending sales. So pending sales, like I was talking about, and closed sales, you'll see a little bit of a gap forming from this past month's data. Now, we get the data from the end of the month, obviously, because you can't get incomplete data that they're going to send out. But this is up until August 23rd of last month. This is what we have. And it's showing that there is a little bit of a space being built between these pending and closed sales right here. Now, new listings, nothing too crazy. It is a little odd that you're seeing throughout spring and summer going into fall. There's kind of a steady number here, and you see all these other years it goes up in the summertime and then it starts to slope back down in the wintertime. So it'll be interesting to see what plays out this wintertime, and with the mortgage rates, seeing if they're going to go. Most likely what they're going to do is either stay steady or go up a little bit more. We'll see how that affects the housing market and if that affects the pending and closing moving forward. But as I was saying, it's starting to build a little bit of a gap, and you'll see it plays catch up sometimes. This is a 3-year statistic here. It starts to play catch up. You get, and I say catch up, it's, a game of cat and mouse a little bit, trying to get that correct pricing right there. And in a perfect world, all these will be, sold in 7 weeks or 7 days. Wow. And all these numbers will match up perfectly, but you really have a lot of balancing to do between seeing why the market is not selling at this price or why it is flying off the market at this price. So it's really interesting right now to see that this is starting to kind of grow apart from each other. And right here it's stayed flat throughout, these higher interest rates stayed flat. So there's no real chasing of a pending or of a sales like you have in these, where there's a little bit of a, higher closed than pending, higher pending than closed. You'll see them cat and mouse here. And then right here flat out, and it's just for some reason starting to spread out a little bit. Might have been due to interest rates around this time when people were going pending, were raising up a little bit higher to where their financing might have fallen through. But it will be interesting to see what happens with the next months on that, and if they kind of even back out. So this is the days on market and percentage of original price. This is a crazy statistic right here. And I know I say this a lot, but this is the past 3 years. So you have the pandemic in here, which average days on market at beginning of the pandemic, a little bit crazy, up in the 50s, which you see over here again, up in the 50s because of the interest rates shooting up back in March of last year. Now, when the pandemic started, nobody knew what was going to happen. As far as real estate, nobody knew if homes were going to sell. They did the whole interest rate super low, and you see the average days on market when people started getting a little more comfortable with people in their home and going out and going to view homes. Days on market and percentage original list price just are separate from each other, which means that real estate prices shot up. So you can see here, percentage original price and days on market shooting up. That is just going up above to 107% that year, up to 111 before interest rates raised back up last year. These are just crazy statistics, and you'll probably never see these numbers again as far as increases in real estate and low interest rates and how that affects it. But right here with the interest rates rising, days on market shot up. And now we're kind of evening back out, and people are getting a little more comfortable with these higher prices. And days on market at the moment, it looks as though we're going to be somewhere a little bit hovering around a little bit lower than 20, probably about 18 to 20. That might raise up going into the winter, seeing historically as wintertime kind of slows down in the real estate market. But again, interesting to see, and tune in for that. And before you go on about your way, if you wouldn't mind smashing that subscribe button, and I will see you next week or the week after, hopefully next week. Smash that subscribe button. Pow.